Okay, topic 2, budget, exercise 1. Okay, read the question. Chanlong Corporation is preparing its cash payment budget for next month. The following information pertain to the cash payments. Chanlong Corporation pays for 50% of its direct material purchases in the month of purchase and the remainder the following month. Last month's direct material purchases were $75, 75K dollar. While the company anticipates $87K dollar of direct material purchases next month, direct labor for the upcoming month is budgeted to be $36K dollar and will be paid at the end of the upcoming month. Manufacturing overhead is estimated to be 130% of direct labor costs each month and is paid in the month in which it is occurred. This monthly estimates includes $13K dollar of depreciations on plant and equipment. Okay, monthly operating expenses for next month are expected to be $41K dollar, which includes $2,500 of depreciation on office equipment and $1,600 of bad debt expense. This monthly these monthly operating expenses are paid during the month in which they are incurred. Chanlong Corporation will be making an estimated tax payment of $7,800 next month. Okay, how much cash will be paid out next month? So prepare the cash payment budget. So the cash payment budget, okay, cash payment for direct material, last month purchase is 50% times 75K. Next month purchase 50% times 87K. Cash payment for direct labor, cash payment for manufacturing overheads. Okay, that is where 36K times 130% minus 13,000. So you get 33,800. Cash payment for operating expenses, okay, where 41,000 minus 2,500 minus 1,600 and you get 36,900. And then cash payment for taxes and you get total cash payment of $195,500. Okay, exercise number 2, Jitra Services Incorporation has 8,300 dollar cash on hand on January 1st. The company requires a minimum cash balance of $7,300. January cash collections are $548,430. Total cash payment for January are $575,160. Prepare a cash budget for January. How much cash, if any, will Jitra need to borrow by the end of January? So you put all the headers and then the beginning cash balance, okay, the cash collection from customer, the cash available before financing, and you will get the total cash payment. Ending cash balance before financing, minimum cash balance desired, and you will get the cash deficiency of $25,750. So Jitra must borrow $25,730 by the end of January. Okay, exercise 3, that is from past semester. Bukit Tradition Berhad has compiled the following data in order to put together its cash budget for the first quarter of year 2020. So this is the information, January, February, and March. So additional information, the selling price for each unit is RM20. Based on past experience, 40% of the total sales is on credit while the remaining sales are by cash. Okay, account receivable from credit sales is projected to be collected 40% in the current month, 50% in the following month, and the remaining not collectible. Inventory purchases costs are estimated to be 60% of sales. They are to be paid 30% in the month of purchase and remaining 70% in the following month. BTSB employs 5 workers who are paid monthly, 20,000 RM in total. rental and marketing expenses are paid monthly 35,000 RM. The other administrative expenses are 48,000 RM, including depreciation 10,000 RM. The beginning balance of the selected accounts are as follows: cash 28,500, accounts receivable 35,000, accounts payable 55,000. Prepare a cash budget for January, February, March of year 2020. Briefly explain how a business can benefit from cash budget. So the answer is you put all the total sales and then the beginning cash, okay, for January, okay, and then the cash sales 60%, okay, 120k for the collection of account receivable for the current month, 40%, 1 month after 50%, and you will get cash available. Okay, so how you get this number? Actually, I have already done the working, so you can look into that working. For disbursement, okay, cash payment current month 30%, and 1 month after 70%. Salary, rental, marketing, other administrative expenses, and you get the total disbursements of 184,000. So the ending cash for January is 31,500. So you get for the February beginning cash. So it is like that for the other month. So you can take a look at the working. Sarawak. Okay. Now let's move. Okay. How a business can benefit from cash budget? A business can anticipate when it has less or more cash balance. This can guide actions or decisions whether to borrow or invest cash accordingly. So the next exercise is A202. Let's use the questions. Sorry about that. Okay, Nando's Berhad manufacture two products called SA1 and RA2. Below are the budgeted sales for the month of January 2021. So S1, SA1, RA2. Budgeted sales, price per unit, opening inventory, desired closing inventory. There are two types of material used in the production, which are Mat A and Mat B. The following is the information related to material for the month of January 2021. So we get the opening inventory, desired closing inventory, price per kg, material used per unit for SA1 and RA2. So first you have to do the production budget. Second, material required for production in quantities, material purchase budget. So first one is the production quantity budget. So you put the sales there, and then you add with the desired closing stock, and you get the unit needed. You less with the opening stock, and you get the units to be produced. So all these informations are in the question. So material required, okay, format A, okay, SA1, okay, put 3,320 times 5. In format B, 3,320 times 3. So is the for RA2, and you get the total here. Okay, for material purchase budget, production requirement, add with the desired closing stock 10% of production requirement, and you get the material needed, you minus with the opening stock, and then material to be purchased times with the price per unit, and you get material purchase value. Okay. For A201, I will discuss this question since there are lots of lack information and confusing statements. So we proceed with the 192. So let's read the question. CVD Sdn Bhd is a company located at Kedah. The company produces picture frames. Traditionally, all frames are handmade, which require 1 hour of direct labor to finish producing one frame. With the increasing demand on their product, the company plans to switch their manufacturing layout to the automatic production facility by installing a new automated production machine, which will save the direct labor hour used by 25% per frame. The company plans to install a new machine on 1st March 2021. In preparing the proposal for approval from top management regarding the plan, the company is now preparing budget for the first quarter of year 2021. The following information are collected by the manager. Okay, the labor related costs are as follows: pension contributions, worker compensations, employee medical insurance, EPF contribution. The cost of employee benefits paid by the company is treated as a direct labor cost. The company has a labor contract that calls for wages increase from 16 RM to 18 RM per hour in April 2021. The company is expecting to have 8,000 frame on hand on December 2020. The company's policy is to have ending inventory equal to 100% of the following month sales plus 50% of the second month following sales. The estimated unit sale are as follows. The selling price is expected to reduce from 50 RM in January to 47.5 RM for remaining month of the year 2021. So we have to prepare the production budget for CVD. So you put all the headers and you put the sales units. Okay, and then the ending inventory. Okay, this is the calculation how you get these numbers, and you get the total needs. Okay, minus with the beginning inventory, and you get the production units. Okay. And then direct labor budget. Okay, production units. Okay, times with the direct labor hour per unit, and then you get the total direct labor hour needed. Okay, so wages 16 per hour. Okay, times you get 80,000. And pension contribution. Okay, workers compensation insurance, employee medical insurance, KWSP, and then you get the total direct labor cost. Okay. Okay, one reason why it is important for CVDSB to prepare a flexible budget. The main importance of flexible budget is that it reflects the expenditure appropriate to various levels of output. The expenditure established through a flexible budget is suitable for comparison of the actual expenditure incurred with the budgeted level applicable for that particular level of activity attained. Okay, that's all. Thank you very much.